Hello guys, welcome to Frequency98 Trading channel. Today we're going to be talking about a strategy we found of the market use, something we discovered that the market uses basically for movement, something the market does all the time. How to be accurate with a prediction, a market prediction that we're going to be doing right here in this video. We'll be talking about this strategy and more, and we're going to be teaching you how you can use them. So before I start this video, please, if this is your first time in this channel, make sure you like and subscribe, share the video with your friends and loved ones, and turn on the notification bell so that when we release another video like this, you'll be the first person to get it. Now, the strategy we'll be looking into today is called, I'll just graph it down so you see it with a brush. Okay, the multi-structure strategy. Okay, so we just got that written there. Now let me comment. So yes, when we talk about the multi-structure strategy, we're talking about a strategy that that was drawn, a structure that was drawn, and despite all of the other movement the market would make, the structure came back, did the same thing, and then would be traded. So of all what the market did, when we have a perfect structure for both market analysis, they start to work with each other. So we got a multi-structure strategy, and so we traded when another strategy came, another structure came into that same structure. It could have came in form of a neckline, a weak line. A weak line is basically let me just show you here what a weak line is the line of every candlestick pattern, every candlestick that represents a minute, the line that you see underneath it, basically explaining where the market was before it went the direction it's going. So the multi-structure strategy is the strategy we're going to be teaching today. And yes, now if that strategy was explained, the next is to know when to spot it and how to spot it. Of course, when you learn a strategy, you want to know when you can spot it and how you can actually trade it. So my direction as to how you can trade this thing will start from what I've taught you before in the previous videos, right? How I taught you to use market structure as well as the Fibonacci line. But then this particular strategy connotes what the Fibonacci the alien wave strategy does. It connotes what the alien wave strategy is doing. For that reason, if you were not able to do all the calculations in Elliott wave strategy, because Elliott wave strategy comes with the structures and calculations, mathematicals and all of that. But if you were not timed, if you were not psychologically strong enough to learn and study all about the Elliott wave, you can actually use this. It follows what the Elliott wave does. For instance, when we talk about the Elliott wave, we said the Elliott wave goes up and then it retraces downward, and what it does again is go up and retraces downward. Now, if the Elliott wave does this, okay, the market structure also does. In my opinion, I'm terming the Elliott wave as the main picture of what the market does. I'll draw a trend line so you can see that one properly. So what the market does is, when it goes up, it comes down. when it goes up it comes down, and when it goes up it comes down. So every time it comes down, there's a reason it does. Now this is what the Elliott wave does. It repeats itself, and we call that the market structure, because the Elliott wave shows us what the market structure does in real time. So because the market always goes up and come down and goes up and come down, the Elliott wave does the same thing, and this is what it looks like. But inside of the Elliott wave, you discover that there is a need for calculation. Let me just pull out the Elliott wave itself so you see what I'm talking about. The Elliott wave is a five line calculation. Okay, this is the Elliott motive wave. In the Elliott motive wave, there are different calculations as to how it works. You see 1, 2, 3, 4, 5, and that's the Elliott wave. Let me put line in this thing so you see how it goes. Let me just make it a line to it. Yes, so the Elliott wave, you see it has 5 waves inside of one wave, and this is the first one. No, the first one is usually up, the second one is down, okay, the third one is up, the fourth one is down, just above the number 1. Alright, just above the number 1. The fourth one is above the number 1, and the fifth one will connote a reversal. Alright, the fifth pattern, the fifth line in the Elliott wave will connote a reversal, and for that reason the market is going to reversal. And we're going to check out the corrective Elliott wave. The corrective Elliott wave is basically the wave that retraces the market. It corrects it, and with patterns inside of letters. So this is how it works. There's going to be a there's going to be a B, and there's going to be a C. So I'll just arrange this properly so you see how it works. So A, B, and C, of course there used to be a 0, and that 0 is what we're going to have on the 5. Alright, so let me just bring the lines inside of this one so you see it. So not drawing as background, just the line. Alright, I found the line. So because the line is there now, you can see that inside of the Elliott wave you find corrective wave inside of it. And of course it might not be exactly inside of this drawn structure. It could be in a lesser time frame, and the lesser time frame confirms all of this. The Elliott wave suggests that when you actually are able to spot it, you can actually anticipate on it, you can trade on it, because anytime it shows up it plays in a direction. But then Elliott wave also works with Fibonacci. Of course, if you study the Elliott wave strategy on YouTube, you see there are Fibonacci structural lines of which it follows from the number 1 to number 2. When you draw, it needs to be at least somewhere around 261 or 361 or 461, depending on where you are looking out to trading it from. But all that was just to tell you that the Elliott wave strategy works and moves the markets, and it is not only a motive of calculations with Fibonacci trends and co, but also a picture you can look at whenever you're trying to trade a market. If you did not learn Elliott wave, I recommend that you learn how to use the Elliott wave strategy, as it will profit you a lot. The strategy comes with 99% accuracy and always work when rightly spotted. So that is why you need to learn the Elliott wave strategy. But the strategy we're going to be learning here today is something the Elliott wave does, but in the big picture, a chart mode. Now, you're only looking at the picture, you're not going to be as accurate as 99%, but you're going to be anywhere around 88% to 90%. That is, if you traded 100 trades, you would win 80 times and only lose 20 times. So for that reason, you're going to be sure to always using a small loss. Alright, you're going to be losing little, so that if you lose 20 times, the remaining 80 times will do its work. Alright, the remaining 80 times, 1:10, 1:10, 1:10, you won 1:10 80 times, and you only lost the ratio of the little loss required there. You're losing little money, 1%, 0.5%, and that is okay. But overall, if you were losing, you're supposed to be losing with calculated risk. Okay, and if you're winning, you're supposed to be winning with calculated profit. Sensible amount of profit should be made. You should be willing to take 1:10 trade perception. Anytime you enter a trade, it is a 1:10 win rate ratio. You're winning, you're losing, you're risking only 0.5% of your capital, or lesser 0.05% of your capital, and your profit is times 10 of your loss. So if you do it like that and you want 80 times, of course you're going to be very, very rich. I'm going to be very, very, very rich when I start trading like that. So that is how the Elliott wave works. So I'll just clean off this so I take you to the real chart and show you how it works. So now this is the Elliott wave, right? And one thing you want to do is trade it. So how do you actually trade it? I use the trend line for this one. I drew a trend line. Now it's time to trade what the trend line I've drawn using the picture of the Elliott wave. So anytime the market goes up, I want to look for it going down, red. Now the market went up like this, right? Now anytime it goes down, I will sell. Okay, anytime I see a red candle forming downward, I will sell this pattern. See, it went up. Now I'll be waiting for a ABC before I sell. ABC. Now I'll wait for the structure. One, the green light created a green structure. The another one created a downward, upward. And if I see a downward, of course this represents a downward. And now I saw a green light take it up. I will buy here. Okay, I will buy here. Elliott wave is a picture as well as a strategy that can be used. It is a mathematical way of calculating the chart as well as being able to understanding this thing. So the candlestick can explain what Elliott wave looks like. All you need to do is look out for it when you find it. Now the Elliott wave strategy comes with a down. If it was a red candle, if it was red, right? You see the red first, the green, the red. Whenever you see a red candle down, the structure is calculated. You see this pattern did more of down, right? Down, up, and then you sell. Okay, that's the fifth wave there. The fifth wave there is going to work well. That is when I sell. So when I see Elliott wave strategy play out like this, I intend to sell. So this can work in any time frame at all. Let's go to the 1 minute time frame because that is where scalpers are trading from. Okay, so when we see Elliott wave form in a scalping strategy, we need to trade it. Elliott wave does not show up all the time. All right, there are calculations that doesn't even work when you're trading Elliott wave, but something that is certain and sure is that when you see it play out, you can actually trade it. Okay, you're not gonna always open the chart and hope a place for it. Just patience is very, very required. Every trader coming into the market should be a patient trader. As I am, as trader as I am, I'm a very patient trader, and that is why I win all the time, because we're not running anywhere. We're still here in the market, and every day is another day. Okay, even when you make a mistake and a loss, you're gonna make money because you're patient, because the day that you're gonna make money is coming. And when that day comes, you are definitely going to make profit. So you don't need to rush all the time. So I will just try and spot out where I can see the playback. And when I see it, I will show you people. So over here, let me use the arrow line for indications. Over here, I see something that looks like Elliott wave. Okay, so when an Elliott wave wants to play out, of course, we need to learn how to use candlestick patterns. Candlestick patterns are really, really important patterns in this market. They tell you if the market is up or down. Now when you see a pattern like this, I think they call this kind of pattern a falling star. When you see a falling star, you need to just know it's downward or upward. It represents any of those two, right? It's a valid Elliott. It can either tell you it's going down or up, but if it's a red, then it's a downward. Now we see another pattern here, and it is a red pattern, and that is the wave 2. And they say wave 2 does not, wave 2 with one wave 2 retraces. So when wave 2 retraces, wave 2 does not retrace more than the wave 1. When there is a wave 1, wave 2 is the retracement, and you get it above the wave 1. So when a wave 2 shows up, we're going to be looking towards the fact that a wave 2 will break structure. And now if we look at this, it looks like a broken structure because this line, but it didn't break. So wave 2 will break. Now wave 2 retraces, but must not retrace anywhere in between the wave 1. It can retrace it can retrace all the way to 50% and 61, 78%, or even 80%, but must not surpass 100%. So we saw an Elliott wave play out very well here. Before we take a trade, we usually need to wait till the 5 wave is complete, or sometimes you can trade at the wave 3. As I learned in the past, wave 3 can be traded to be anticipated for the wave 4. So when the wave 2 retraced, we can see where it stopped at. It stopped here. Alright, now the wave 3 is going to form when a wave 2 plays out. When the wave 3 is forming, okay, the wave 3 is just anything below wave 2. Now this particular red line is a valid wave 3. Wave 3 always connotes there's going to be a wave 4. Now when there's a wave 3, it should play out. Now wave 4 does not retrace into the wave 1. This is the wave 1, and the wave 4 will not retrace into wave 1, and this is a valid one. Now the wave 5, wave 4 does not retrace into the wave 1. Now the wave 5 will take place when the wave 4 has been played out. So you see the wave 5 coming down, right? The wave 5 did not retrace into the wave 4, so you can as well take a trade here, a quick scalp trade, and make anything 20 pips, 20 cents times how much you want to be making. Okay, this is 1.3. The minimum, the smallest lot size will give you $1.5 in that step index. So that's $1.5 win if you were able to spot this pattern very well. Now another trade setup is the retracement. Another Elliott wave played. So the first green candle showed up, the second green candle showed up as a falling candlestick pattern. The third one showed up, and then a fourth trade could have been taken here. So that can work all the time you try it. So every time you see an Elliott wave, you need to know how to trade it. You need to be sure that the market is giving those confluences. I need to be sure the market is giving those confluences before I enter a trade. This is how I trade, and that's how come I became very, very probable in my strategy. Every time I make a strategy, it works 98% of the time. I don't lose money when I trade this market. I'm not scared because my strategies are backed up by a very probable percentage, a very probable win rate percentage. I'm always sure of any trade I take because I do in-depth calculations on how I trade them. When I make a trade, I calculate very, 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 very intimately before I make a trade, so that I avoid any error. I don't make mistakes. My strategy is usually 98% over 100 anytime I'm taking a trade, especially when I'm using the Elliott wave. So now I will take you to another dimension of this strategy, which is what I actually came here for, the double structure strategy. Okay, the double structure strategy is what I actually came here to teach you guys, but I needed to show you a little bit of the Elliott wave just so you can have the direction or the clear picture of what we're talking about. Elliott wave can be traded as a picture, but mainly it can be traded due to its high efficiency when calculated. So that is a picture you can look at when you're trying to trade Elliott wave. But for now, we're going to be looking at the double structure strategy. What actually took us here? Why I got interested in the double structure strategy. I got interested in double structure strategy because it is a reciprocate of the M and W pattern. M and W pattern is a continuation that got reversed. A continuation is a trend a market structure, right? But when it gets reversed, it is an M or a W. A market structure is formed, Elliott wave is calculated. Okay, M and W plays out when the structure gets broken. Let me repeat the pattern I drew to you people at the beginning. Okay, this is structure, and so if you want to be 100% calculated when you're taking this trade, you are going to draw those Fibonacci lines, calculating your M and W as probable as possible. Now, when this structure formed, we all know Elliott wave is calculated inside of this number 1, number 2, number 3. If you're using trading view, all right, number 4 does not enter into number 1, so you're gonna know that yourself. Number 4 and then number 5. If you're trading on trading view, you're gonna see how there's going to be a 0 here. Anytime you're trying to calculate an Elliott wave, there's a 0, there's a 1, there's a 2, there's a 0, 1, 2, there's going to be a 3, and there's going to be a 4, and there's going to be a 5. Now, Elliott wave is very, very essential when you're trying to make the best out of your calculation in this market. Now, when the number 5 comes in, is when you see a reversal. When a reversal takes place, this is where your trade is going to be taken at, and your stop loss is going to be anywhere on top of where you take a trade at. A very, very small loss is what is required. You don't need to lose all your money before you know you were not supposed to take that trade. So, trading with the market and using candlestick analysis as well as the candlestick, as well as the pattern, can give you a very high efficiency and high probability in your trading strategy. You need to be that's accurate. So anytime you do it like that, there's going to be a reaction. The market gives a reaction that makes a trade work out for us, guys. So this is how you see it work. It played out when there's going to be a hand. But if it is one, it might not be sure. Two things can confirm one. All right. The Bible says when two people are gathered, there's more power. Now, this is the strategy I'll be showing you here. The double structure strategy. Boom. This is where we see it. Here comes the double structure strategy, guys. The double structure strategy has taken place here. You see, how do you know it's probable? When you look into the wick line, you see a wick line is not even there, but you look here, and when you see a wick line inside here, the second, which is the left hand side, can also be calculated based on this. Anytime the market retraces it, if it goes up, it's gonna break. It's gonna be a sure trade. Okay, that's how you're sure of a trade you're taking. If it breaks through, it's an upward. Now, I want to show you a perfect example on the market here. Look at this. Look at these two strategies. These two patterns meshed up together, upward and downward, but in a structure, right? Upward and downward, but in a structure. You see it? Double structure strategy. Yes. So a green, red, and then you draw the wick line, and if a pattern touches it, either up or downward, it is going to go up. If your neckline is red and you have a green wick line, it is going to still obey you. There are multiple areas where we can actually see this happen. This point had a red neckline and a green wick line. A neckline is a place where you draw your analysis from, where you draw the market momentum from. But a wick line is where the market actually got placed, where the trade was taken. A wick line is where you enter at. A wick line is just that point that acts like a pin, a nail in the head of a hammer, a nail in the body of a wood. He enters into it, and there's got to be a retracement. So you see the red line, and something shook it, and it worked. It happens all the time. Multiple neckline to wick line, the multi-structure strategy. That's the title of this video. Let's spot multiple areas where it happened before we see what we're gonna be doing to the market. Now we have another neckline here. A neckline was here, and it was both red and green. That's not valid. And so it was okay if it was green first, and we had another red touched it. When we had a red touched it, it worked out. But that's not what we're looking for in that case. So let's say we need something more realistic in order to enter a trade. It can be drawn anywhere and it can be retraced anywhere. It works like that. So you see this? It could even be red to red, red to red. But just make sure the body is not entering the body of the candlestick is not entering into the wick line. That way there's going to be a challenge. Okay, see the one I'm trying to show you here, guys. This green neckline, let me just take this out so you see it properly. This green neckline here, when it touched the red one, you can see when the red neckline touched it, it went into profit. Now you see it there, I want to draw another one so you see it properly. Let's say a red and a green, there was nothing like that, but a green showed up and a red touched it, and that was the most confluence we were looking for. It could even be sideways, it could even be downward to upward, it could be downward, it could be upward to downward. Now like this, and then like this, you should retracement like this, and then it starts going like this. Okay, it could be when drawn, there's going to be a retracement to it, and when there's a retracement, it goes down. So we're looking at that. Now let's go into the same thing we see. Now let's talk about the pattern here. You see it actually came to pass here. There's a green and there is a red. This area, there's a green and there is a red. When a red line touches a green line, it goes opposite. Okay, but when a green line touches, you know when you see a green touch a red or a red touch a green, you know it's working, right? So that pattern will work all the time. You see it, you can trade it, and you're gonna make a lot of money when you're anticipating on this particular pattern. It's a very probable one. Okay, so I'm trying to just spot out that area where I was showing you people. Alright, this is it. You see it here? This one here. Alright, so let me just put it at the edge. You see, well, the red entered into it and went upward or downward, and then the structure was broken. When the red line entered into that stuff, the red line got hit, and then went the direction it was intended to go. So I want to look at more strategies here, more strategies to take. So I'm looking for the other red candle, another green candle or red, anyone that retraces in, but this one didn't quite work well. It did not work. There was nothing inside of here. So another one is this area where there is a red candle and there is another red, but we're not looking at red for red, we're looking at green for red. So look at this, there's nothing here. It's easy to spot, you can always look for it in the market. So this is another red candle, no green. Okay, there was a green candle that retraced it. Okay, we had a red candle here, we had a red here, and a green retraced it, and it went into profit. See it? A red, and this is a green. But that one does not work all the time when a red retraces red like that. I like it when it works side effect, sideways. Okay, whereby this was supposed to be a upward. Alright, it retraced, alright, but this is red and this is green. Oh no, this is green and this is red. The red retraces it and it goes up. Alright, now we're gonna wait for the red to be retraced and you're gonna take a trade, and that's how it works. So I like it when it's like that. Okay, when a hem represents a W and when a W represents a hem. This the place I showed you, it worked so well. I'm trying to look for another area where it worked at, so I know what to tell you people about it. So a green line shows up again. The red retraces it. That is not what I'm looking for. I'm looking for anything that works sideways. Anything that works sideways. So let me just take this off so I know what I'm doing. Anything that works sideways is what I'm looking for. So let me just make a duplicate copy of this so I use it elsewhere. Okay, so the green creates a structure, and then the red retraces it like it's gonna go up, then it goes down. I see what I like here. Of course, when you learn this on the internet, you see there's a lot of reverse psychology towards the strategy, but as long as you're intact, you're gonna learn it. A lot of reverse psychology was merged with this one, so you have another green and another red. But this one was not retraced well. You see the pattern touching the body, the line touching the body of the red candle, and that's not probable enough. Let's look for another one. Okay guys, you can see this one worked. This one, where we had a green light and then a red line. Of course, that was broken. Guys, this game is becoming fun. Okay, it's fun. I used to regret learning about forex trading, and I used to regret why I lost all my money in forex. But now I'm seeing the impact of all my hard-earned stress. I used to put a lot of efforts and energy in this market, and now it is yielding me profits. So anything that goes vice versa works. Multiple structure strategy. Green for red, red for green. Let's make more researches. Okay, now I see what I'm looking for here. Let me graph it up before I show you. See that, guys? It worked here. Now it has always been a player. It has always worked out for those who were trading it. Let's say we took and then we draw. Okay, and we draw. You see a green candle. You see it's working very well. Its risk to reward ratio looks more than 1:10. It goes down anytime it plays out like that. A secret strategy only professional traders know. Okay, is what I intend to bring to you guys anytime I teach you trading. Only professional traders know them, and it worked. It works for professionals, and when a non-professional uses it, you have to work for him too, because he's just learning about it and it's gonna work for him. You see it, guys? That's the green candle, and now the red entered into the green candle, and when it did, we waited for a red to retrace it. Let me just draw that line. See the red here? The red that retraced it, and it went down and down and down. It just moves the market. I believe this is how the market moves. Let's look for it elsewhere and let's see if it played out. If it's played out, it's gotta be a player. For traders who are looking for strategies to trade, I just found you one. You can monitor the chart day and night to spot this, or you can trade it. Guys, let me show you another point where it got played out again, but I don't know if this actually touched it. No, we did not touch, so it did not work. Now that is not let me use the box to check it if it actually touched it or not. So this is the box, and this is the green light, and that's the red light. It did not work there, so let's just go elsewhere. So I can see the pattern came around here. Alright, this is a vice versa. There's a red candle and a green candle. It didn't touch, guys, it didn't touch. So this is another red candle. Okay, I think I found something here. It still did not work there. I'm trying to see anywhere it worked at. Well, let's say red for red equals green. So guys, that's gonna be it for this video. Thank you for watching this video, guys. If you actually enjoyed or learned something new today, don't forget to like, subscribe, and share the video to your friends and family. Tell them to also like and subscribe. We're gonna be making more videos in the future, but whenever you learn something, make sure you like and subscribe. You are a subscriber. And it is time to join our VIP. The VIP channel offers a lot more of this, so you can actually join us, make your VIP payment, and become our premium subscriber. That way you get hundreds and hundreds of signals on forex trading. You get signals that you can actually anticipate on. They have real good accuracy, and also you get videos that are more premium than this, and that way your trading success is going to be assured. Because anytime you invest your money, you have a play, you have something to do, and when you do it, you're going to be profitable. Thank you guys for watching. This is Frequency in FX Trading. Any strategy I teach here, I trade. So I'm 100% accurate, and you as well can be 100% accurate when you back with us. Frequency in it.